it kind of pissed me off. And I didn't totally get it. I've been taken, I've been stolen from, I've been cheated on. Just can't just trust people anymore. It's about making decisions that make me sleep better at night, but not what puts more money in my pocket.
Welcome to the Masters of Business podcast with Daniel Beer.
So we have Greg Herlean, founder of Horizon Trust, $1.2 billion in assets. And this guy has scaled his business so fast, so effectively, efficiently, but by design. I'm looking forward to this interview. Greg, welcome to the Masters of Business podcast, man. It is great. And by the way, just somebody I've been able to develop a friendship with, a quality guy. Welcome to the conversation.
Thanks, Dan. Thanks for having me. Excited to be here.
So the premise, Greg, as you know, of this podcast is we interview people from all different industries that have built businesses and gained scale where most others struggle to get there. And what I find is that no matter what discipline you're in, I come from the real estate space, but no matter what discipline you're in, no matter what industry you're in, there's typically some commonality that we can find as entrepreneurs, as business owners. And it's always so important to learn from other leaders in other spaces. So that's why we run the podcast. And there's typically a core competency, a superpower, so to speak, in your business, right? You're probably good at a lot of things, but as you've grown this 1.2 billion under management, what would you say has been your core competency, your superpower, so to speak, in business? Was it marketing? Was it people? Was it strategy, vision? What would you say really made the difference where you add value to the organization?
Well, I obviously it's all of those things, but what was my probably leading driver? I would say for me it was the drive to fix what I thought was broken, and so I was like, I found something that was unique, and I wanted to fix it because there was just something wrong with it in the industry and space, and so for me it was this drive to build and do something that I think was being done poorly. So that was probably my fundamental thing is because there's lots of people that have real estate brokerages, right? Or companies or even trust companies. But the messaging was terrible. And so I was like, I want to create something that's different than all the competitors that were out there.
So let's unpack that. Because what Horizon Trust does, primarily at least, you're a self-directed IRA company. And so people with IRAs or 401ks, maybe from the past, from an old job, there's so many just billions, and you could probably correct me on that. I don't know if it's even more than that. I don't know if it hits the trillions or not, but just sitting out there in these accounts that most of the time people lose track of. And if they put them under the custody of a company like Horizon Trust, where you now have 1.2 under management, 1.2 billion, by the way. Now they have access to that money to invest it in assets like real estate, like hard money, private equity deals, et cetera. So let's unpack a little bit more of that journey. What led to you starting this specific business? You weren't always in this space, and how you saw the gap in what the industry was providing consumers, right, and investors.
Yeah. So look, at first it was two things. First, when I was 23 years ago, I wanted to be in real estate, right? So I wanted to be in real estate. I was finding deals on paper, right? Doing my research, but I had no money, didn't have friends with money, and a bank wasn't lending me money. I had no credit, right? And I remember going to an event back when they were like live events, and someone talked about IRAs and how someone could invest an IRA in a deal. And I was like, okay, well, everything happens for a reason. I'm going to find someone with an IRA to fund my first deal, to be my partner with their IRA. So truly, I learned about this message 23 years ago, and it's how I did my first deal. Without it, I learned the importance of the power of money. Like I could find all the deals I wanted, but if I didn't have an equity partner or a lender or a relationship with either one of those, it was pointless. So once I learned that IRAs was a potential tool, I gravitated to that. So I was like, okay, I just learned something that I thought everyone knew about. But then I quickly thereafter learned that the special sauce out there was nobody knows, for the most part. Very few people, less than 5% of Americans know that you can do this. And so then I was like, this is an opportunity. I mean, and I learned that real quickly because I started talking to people with money, and I learned that nobody wants to talk about the stock market. I mean, when I say nobody, probably the same percentage, 5 or 10% of people do. But people want to talk about real estate. It's exciting. They understand it. They live in it. They've bought it. They've sold it. Stocks and mutual funds and bonds, for the most part, people don't buy. They'll have their advisor buy it for them. They don't understand what they're buying. So I saw an opportunity to share and open up a conversation about a message that nobody had heard of, even though it's been around for over 40 years. And so that's what got me excited. I was like, okay, first and foremost, I was introduced to it so I could flip my first deal. So selfishly, I had to pay my bills. So I was like, I've just got to hustle to pay my bills and find money. So that was my mentality at first. And then once I did my first deal, I was like, wait, there's, at the time, there's like 65, 70 million IRAs. I was like, there's that many IRAs? I mean, this many people out there don't know that they could actually potentially partner with me or lend to me. And so it just completely opened up my ability to raise money and scale my business. I mean, on another level. Like when people talk about raising money, because everyone wants to raise money for their business or real estate, it's all about, if you want to scale, you need money, period. I just felt like I just learned the secret sauce that I thought all of America knew about.
Right.
Little did I know that most of America had no idea.
And what's interesting about a self-directed IRA, and feel free, by the way, like if you want to do the short just version of just making sure everybody even understands what it is. What's interesting about it is not only is it such an important tool for people that have IRAs, but also if you're raising money for a project, if you're raising money for a hard money fund, if you're raising money for a big multifamily deal, well, there's the source of it. In fact, one of the things I've noticed, if we talk about, just love them or hate them, Grant Cardone, who has obviously built a big name, a big business. Well, I started, once I understood and learned all about self-directed IRA, got to know you, moved my own IRA over to the custody of Horizon Trust with you and your company. I started paying attention when I would get his emails, Grant Cardone's emails, and the entire message, to my surprise, was, hey, right, yeah, 10 grand, 20 grand, 30 grand, just sitting around somewhere in an IRA doing nothing, invested in who knows what, and it's been sitting there for 15 years unmanaged. Well, you can actually take control of that, right? So it's just interesting how many people and how many ways it can all be used. Feel free to just sort of give us a very quick, just making sure everybody understands what a self-directed IRA is.
Well, look, a self-directed IRA is really just a descriptive term. So we're a trust company, and as a trust company, we don't give financial advice. We don't give recommendations and get paid on where you choose to invest your money. As a trust company, what we do is we basically hold your account, your retirement funds, and allow you, the IRA owner, the retirement account holder, to make decisions on where you're going to invest, which is typically in alternative asset classes like real estate. So, for example, right now, if you're at Fidelity, Charles Schwab, brokerage house, wherever, the typical marketplace, you talk to your advisor and they usually say, on a scale of 1 to 10, how aggressive are you? And then they put you to some, perfect portfolio of hypothetical growth over 10, 20, 30 years. First of all, that's not working anymore. So that's a little silly, but that's how it typically works. If individuals knew that they can move a portion of or all of the retirement money from that kind of situation to a self-directed IRA, the rules don't change. So just to explain this real quick. So Dan, when you have a traditional IRA with Fidelity and you move over your traditional IRA, it's now called a self-directed traditional IRA. So there's no special rules on contributions or distributions. They're exactly the same. The only difference when working with a company like ours is you get to pick and choose. There's a few things you can't invest in, and we kind of guide you through that. We got to make sure the documentation's correct. But you get to pick your investments, which is also why it's not for everybody. This is not, typically those that are listening to this are entrepreneurs, business owners, real estate investors. This is who this message is for. The guy that has a 9-to-5 job who does not want to do any due diligence on their investments, they're going to keep doing what they're doing. They're going to keep getting the same results. We're here to kind of service the other individuals. And just to give you an idea how big this opportunity is, there's over 100 million now, just barely over 100 million IRAs in the United States that have over $7 trillion. So, and only 4%, almost 5% of Americans self-direct. So if you're listening to this and you have a traditional Roth, simple, SEP, any one of those kind of IRAs, or an old 401k from a previous employer, which probably most of you or your spouse or loved one has an old 401k. When I say old, it's got to be a prior 401k. That qualifies to transfer over, no taxes. You don't pay any taxes. Transfer over to our trust company, goes in trust for you in your account. You get to log in and see where you're invested and how much money's in there. And you get to start investing in different things. And look, just to give you an idea, when what you can invest in, everyone wants to talk about real estate because that's what I am as well. I love talking about real estate. But my son, 22-year-old, just to give you an idea,
right.
he's got a Roth IRA, and he just told me this, and I think it's hilarious. He flips now his third forklift with his Roth IRA. Forklift. So he's invested with somebody who's buying a forklift, right? I think for $12,000 to $15,000, giving it a liquid overhaul, a paint job, right? Flipping it, fixing it up, flipping it, and he's making between $1,000 and $1,500 in 2 to 3 months on his little $12,000 to $15,000 investment in his Roth. And so I share that with you because one, good for him. I mean, kudos to him. It's not, I mean, I didn't teach him that, but he's doing, he's getting creative on his own. But to give you an idea of self-directing is really widespread. You can be in multifamily, storage, Airbnb, crypto, businesses. And so there's a few things you can't do, but there is no good long or short elevator pitch. So that's my pitch as far as what a self-directed IRA is.
So you're building this company, you identify all the opportunity, but what are the challenges, right? So what challenges did you end up facing in scaling the company? Because one of the things that I love about this type of environment, one of the passions I have for so many things I do in my private business life, in the networks, in the communities that I've built, and also the community that's right here on this Masters of Business podcast. One of the things that drives me is you've already made X amount of mistakes. You've already faced the challenges. And so us learning from you in this case, well, we don't have to repeat the same mistakes if you share the wisdom. So what did you face along the way that posed the challenge? And how did you overcome?
Well, we've all had multiple. There's a couple I can think of very clearly. One's more personal that I'll share as far as not a business specific, but I remember when I first started the trust company, I'd already now built a real estate kind of portfolio. And so I was multitasking, having, everyone says, you have multiple streams of income. I think there's some truth to that. But when you try to focus on 2 or 3 different big projects or companies, it's nearly impossible. And so once I started the trust company and it created its own legs, it started taking off within 24 months, I sadly had to really give up a lot of my real estate from a business perspective. I still do to this day a lot of my own personal real estate, but I had to give up the clients and my whole real estate portfolio that I was dealing with partners and funds, etc. But I would say one of the biggest things that totally changed my business is driving and putting all my focus into one business. And I know some people talk bad about that, but I will tell you, my profit line went up over 30% within 24 months just by not because I'd increased a ton of new revenue, but by just keeping my eye on the ball on this one core business. And so that was a huge help. In my business. And I never thought that'd be the case because everyone talks about all these different streams of income. It sounds sexy, but it's a little harder to do than it sounds, than talking about. In
building this business then, was it just up? Or do you have that moment where you're like, oh man, are we going to make it to next month? And maybe it didn't, I'm just curious. Did you run into that?
So, no, we never ran into it. It's only gone up, but it's gone up at different levels, right? I mean, it's definitely not been all peaches and cream. You got to understand, I'm marketing against when people are like, why aren't you doing more organic traffic and getting all your own leads? And this is such a great message. I'm competing with Fidelity, Charles Schwab, TD Ameritrade. I'm competing with.
You're not
the
competing
biggest
with the industry. You are, but you're competing with the alternative as well.
I'm competing not only with the alternative. That part was a little bit easier because there's less of us, but we're competing after the same retirement dollars.
Right.
And so I'm competing with the big powerhouses. And I think the hardest thing that was for me was getting people to understand that they can do this because it sounds too good to be true. And why haven't they heard about this before? And so, I can move my IRA. My financial advisor hasn't told me I can move my IRA. My CPA hasn't. In fact, today, clients will call their CPAs or advisors and say, hey, I'm thinking about self-directing. And they say, oh, you shouldn't do that. And they've never even heard of it and don't even understand it. It's just something different. So I think just a lack of knowledge and education has been the hardest thing. And I'd say what's creative is now these Fidelities and Charles Schwabs of the companies or of the worlds, they've now come out with something called a self-directed account. And so now the clients will call us and be like, oh, Fidelity offers that now. I have a self-directed account. Good for them. They've just come up with a new marketing plan. Their self-directed account just gives the clients a few more options. That's it. Doesn't allow them to invest in, in a real estate deal. And so look, it's the hardest part's probably been just the kind of the education, but it's also the best part for me, because I feel like every time I bring up the subject, most of the room is novice in it or has never heard about it. Unlike real estate, right?
I mean, to my surprise, when I met you, we were in a very, really sophisticated room, and that room was novice to it. So just interesting. So, okay, you're running the self-directed IRA trust company. I'm just curious. Let's take a left turn real quickly. I'm always curious, like when I ask in different industries, because I try to find those threads, right, that connect all business together. What are the KPIs that you focus on? I'm sure it's revenue and those, but what KPIs maybe specific to just the nature of your business are you watching? Is it account openings, et cetera? And then, without putting words in your mouth, what are you looking for? How do you know, how do you quickly check the health of your company?
It's all KPIs in every department from wait time, because I'm our company does a lot of calls. We're not all virtual because it's people's retirement monies. People want to talk to somebody. This is not like a $1,000, TV you're buying. This is someone's a decade of savings or 2 decades. So wait time is probably one of the most critical KPIs I look at.
Wait time meaning like I'm on the phone waiting to speak to somebody?
That's right. I want real time, and then also processing time. This is why I got in the industry. But KPIs for me, those are, besides revenue, I've got all kinds of revenue KPIs. But processing time is when you say to us, hey, here's the deal I want to invest in. Please wire the money to title. How long does it take my company to confirm and verify the asset that you've just submitted to us and get the money to title? Believe it or not, that's a huge part, and is why I started this trust company. Most trust companies take anywhere from 2 to 4 weeks to process an asset. As you know, in real estate, I mean, you could lose a whole deal. Our processing time today is 1 to 2 days, mostly 1 day, which is unheard of in the industry. So KPI is, the big things for me, and this is what makes us different. Also, what's created a lot more revenue for us, because it's my selling point. It's like, yeah, look, you know what? We're not the Walmart. We're the higher brand, and we're going to cost you a little bit more. But at the end of the day, we're going to save you or make you way more money. We're 1 to 2 days processing. Wait times are always less than 2 minutes. We try to be around a minute wait time. And then we got a lot of sales KPIs, as you can probably imagine.
What are 3 of them that you look for?
It's calls out. How many times we're calling? Because all
activities, calls.
Every call talk time as well. I want to know how much talk time everyone has, because talk time tells me
that there's meaning, there's depth.
They're selling. I can just tell by talk time how many apps that person's going to bring in. So I then track how many apps go out. So how many accounts said yes, apps went out, because I know if we do 100, like this last month, we did 175 accounts out in August. And by the way, I track, this is looked at every day. I mean, this is that gets me excited every day, is the report that I get at the end of the day. But if 175 apps go out, the following month, we're going to have between 140 and 150 new accounts in. And so for me, seeing how much goes out tells me how we're doing for the following month. And so those are a few of the KPIs that we have. I mean, when we've got, every department has its own KPIs, and then incentives. Like that's the other thing that I think, one thing that I've learned that's been difficult in business is, as much as I love the company and I believe the staff loves the company, I try to give incentives out, but really at the end of the day, the 2 things people want is more pay and time off. At least that's what I found.
Well, just sitting with the KPIs for a moment, because they're only as good as what you do with them.
Mm-hmm.
So let's have a quick conversation, a hypothetical, on if you were looking at them, and it sounds like you look at them on a daily basis, and they didn't look the way they're supposed to look, then how do you give me an example of how you would turn that into an action item, into a corrective, approach or strategy or performance improvement plan, or where do you go with it?
Well, a lot of that has to do with my executive team and the pods that lead, right? So we've got a couple tiers in these different pods. And so like our sales, for example, they meet every day. So every day they have a 15 to 30 minute meeting in the morning, right? Start off the day. And we review the day before and also what the goals are for that day and for the month and how they're doing.
Really good.
And so it's pretty hard to be too far off track when we're doing daily this is sales, right? This is not every pod, but sales, that's what you need on sales. That's our driver. And so you can correct pretty easily that with also incentives. That's the other thing is when we have less leads, which happens every 3 or 4 months, right? They'll call me and be like, hey, Greg, do you have any events coming up or whatever? We're low on leads. So that's when she'll tell me that. She'll see it, she'll forecast it and say, let's do something for next month. Let's do an incentive for next month because we have lower leads. It'll make them call more do more dials, dials for sales. And so we're kind of ahead of that as far as sales go. We try to be ahead of it at least. And so even summertime, we used to say things like, oh, it's summertime, we expect it to slow down. I said that once to my sales manager and she's like, Greg, don't ever say that again. We have no expectations of slowing down in the summer,
right.
Which we did for the first 10 years of the business. The last 4 years, you wouldn't even notice summer. It has been just consistent. And so that's from a sales perspective, that's what we do. Then from our other pods, they don't do dailies. They do usually 1 to 2 meetings they have their own regiment and schedule, but it's 1 to 2 meetings a week. And then we also have, so this is the long answer to your question and keeping people in check is all the pods have a meeting once a week. And this is a great time to talk about processing. Like if sales is like, hey, processing's taking a while, we're getting these complaints. It's time for them to kind of get together and talk of anything that they need to tell each other to relate to their teams. And so it sounds like a lot of meetings, but they're very quick and efficient. Nothing's more than a half an hour. And then we do an all co-company meeting every other week for 45 minutes. And I'd say this is the last thing I'll share on this question is we do every other week we do shout outs. And that the shout outs are been some of the most motivational, sometimes emotional segments our company has together. And we do it for 5 to 10 minutes. Anything that someone wants to say that someone else has done in any pod, a shout out to them. And it's awesome. I mean, and it's random stuff too. Like someone's had a baby or going through a hard time and how someone stepped up and helped in their department or whatever the case is. But shout outs have been great for a company.
So, you really caught my attention, the incentives and changing human behavior. And like, these are those things where you might have 2 companies seemingly with the same opportunities with a very different result. Take us in there. Let's go deeper there. So what are the incentives or the contests or the week sprints or whatever you're doing? What have you found leading a sales team that moves the needle, that changes human behavior to where the result actually changes as well?
Well, sales team almost
What's your favorite?
Well, for me, it's been the company goals that moved the whole company work together. Sales is always interesting, right? Because it's almost always compensation related. And so all kinds of compensation kind of goals and incentives. We've tried other things with salespeople, but it always comes back to money. My favorite incentives are when typically every other month we come up with the 5 different pods will have a goal for the next 30 to 45 days. And typically it's us forecasting out. We see low leads. We see wait times have gone up to 2.5 minutes. We see a few things. We're like, hey, look, you know what? Let's reset something. And what we do is everyone comes up with a goal for every pod, and all goals have to be hit for every pod. So everybody's cheering each other on and helping each other, right? Some pods will help and take phone calls and concierge to bring the town our wait time low. But what we do is we do 3-day weekends. So
And
if we hit it, everyone will get, half the team will get Friday off, the other half will get Monday off. And believe it or not, when you do that, everyone's so excited to have 3-day weekends. They're paid, right? Like a 3-day weekend, and like they're working, and they're all incentivized because they all want the day off. And that getting a time off but paid 3-day weekends is probably the best incentive.
I love that, because we talk a lot in my business and in my industry. A lot of us will talk about, hey, do you want more time or money, right? And sometimes we'll ask the agents, like, hey, raise your hand. You can have more time, you can have more money. You can only choose one, and we'll have them raise their hand. And what I love about what you just described is you found a way for them to choose both.
Yeah,
You kind
100%.
of bridge. That's awesome. It's brilliant. That's
The
really
3-day weekend thing, we've just started, like, I don't know, 8 months ago. We've done it 3 times. It is the fan favorite. And then I'm telling you, and what the frustrating thing my CFO says is, wait, hold on a second. So the team's there half the day and all our KPIs are met when half the staff's there. He's like, we should let people go.
right.
But obviously you can't run at that, at that level every single day. But that's been a big one.
So I love asking business people how they approach risk. How do you approach risk? What's your tolerance for risk? And just anything around that, how, when you look at an opportunity, is how do you measure if it's going to be, the juice is going to be worth the squeeze, so to speak?
I'd say it's it's an easy one now, but I would say the answer that I have for you would probably change every 3 to 4 years of my life.
Wow. Yeah.
And now that we have, 14 years, 1.2 billion under management, 40 employees who have spouses, who have kids. So now what we do, the decisions that I make, the risk that I take affects at least 150 people that are employed, if they're families, then another, 8,000 clients. So it's different now than I would have said 10 years ago when we had 1,000 clients and 10 employees. And when you're beginning your business, you have to take more risk. Now, I've gotten way more conservative for a lot of reasons. Look, I've been taken, I've been stolen from, I've been cheated on. The market's changed. All these different variables, and you just can't just trust people anymore. For me, I do follow my gut more than I ever did. And it's about making decisions that make me sleep better at night, but not what puts more money in my pocket. And when people used to say that to me 10 years ago, it kind of pissed me off. And I didn't totally get it. And I think what comes with success in building a team is money. So when you have money, you have the ability to say no. So I get hit up with ideas and opportunities into new relationships all the time, and it's just nice to say no. And so I take way less risk. It's not worth it to me. We got too much that we handle and care for. So I don't know if it's the answer you're looking for.
I love that. I love so much about that. Oh gosh. And you helped me with an insight that hopefully will come back to me in a moment, because then you said something else that made my brain go too. So let me just go there now. Maybe the other one will come back. So if you leave the risk aside for a moment, in terms of risk that's going to take you, crush you, cost you, millions of dollars, leave that type of risk aside. But you're approached with opportunities. You're approached with partnerships. You're approached with endorsements. You're approached with software that's going to make your company more efficient. That's going to do this, here's the question. How do you know when you're looking at something worth pursuing versus the proverbial shiny object, squirrel, distraction?
Well, for me, I've gotten really good at saying no to things I want to do. And so so I say no almost always first. And I know that sounds bad, but I do. With ideas my staff have, I want to see if the idea and the person and the relationship still around a week, a month, or 3 months later. Because if it still is, then it has legs. I mean, look, you and I spoke. And for me, that was one of the probably best new conversations I had in a long time. When you and I met, what was it, about a year and a half ago?
Yeah.
And I don't think we talked about business for more than 60 seconds, but we were together for 2 or 3 hours. And those are the kind of, like, I want to know who Dan Beer is. I want to know, like, what motivates you, and see if you're, if it's aligned with how I feel and what I think. And I'm a big family man. So, I care about how, and I care how you treat waiters and staff, like all those little things I pay attention to. And then it's a slow play. I date people before we get married. So every good decision, even a real estate decision, I get hit up with opportunities with real estate because I'm still a real estate investor all the time. So what I do? I say, you know what? It's a long answer to your question. Send me these three things.
It's great.
Send me these 3 things. Because everyone's got an effing slide deck, and well, they don't, but they all have something, and they all have a phone call. I don't do phone calls on deals. Send me these 3 things. And usually when I say send me these 3 things, which are typically simple, like, is title open? Send me the contract. Send me the slide deck. Send me the terms. And then I want a summary, a paragraph summary. That deters about 75% of the deals that come my way.
Just nothing.
Because it's work.
Nothing.
All they want to do is forward me something and see if I want to invest. Not interested in that. So it's a slow and sweet game for me in almost everything I do. New relationships, new business. And if it fits, it fits. And if it doesn't 3 months from now, that's why I don't want to, like, put all this work into new relationships, because a month from now, it might be someone I don't want to work with. So I say no first. That's what I do. Say no first.
So let's perfect place for us to segue into final question I have for you. You've built and continued. I mean, you have this business. You're always looking at or analyzing deals. You have a full day, and it's time to go home. A lot of us, it doesn't matter if it's the financial advisors listening, if it's the attorneys listening, the real estate agents, if you're running a tech company, software, no matter what it is, we get home and it's that moment of how do you make the transition from business driver, from just that, dominate the day, to family, to husband, to spouse, to, in your case, I know you have kids. Do you have any advice? Because even some of the most effective, most self-aware entrepreneurs and business people, this tends to be one of the final lessons. And sometimes it takes too long. So, and maybe you're still figuring it out for all I know. I've interviewed people on this podcast, and that's their answer. But do you have anything that you'd like to share that maybe has worked for you?
Yeah, this will be a simple one, and I'm not perfect at it by any means, but I've gotten really good at it. I have 5 kids, right? So family is really important to me. I'm a good father, and I know that, and it is my number one goal. And so what I learned 10 years ago, probably, someone told me is, don't let the business own you, own your business. And I know we've heard that before. I didn't know what it totally meant until we dove deep into that. But what he meant was, you own your calendar. You do. So I left that meeting. This is back when I was in Vegas, full time, and in an office every day. And I went back to all my executives and my assistant, and I said, here's now my new schedule. Starting next month, because I know there was already stuff in my calendar. I said, this is when I'm taking meetings. And I only take meetings on these days at this times. And within a month, I went from working and taking calls from home or being late or whatever the case. I almost went in half, but I made more money. I was a better father. I was a better person. And so now today, because it's a little bit different now, I'm working at home more, I look a week or 2 ahead. And so every week before I say, here's my schedule, and I calendar everything. If it's not in there, and I have my kids, like today my cutoff's at 3. I'm going surfing with my son today at 3:00, and it's in my calendar. So I feel like I'm the boss of my calendar. And for 15 years of my life, the calendar owned me, and I would say yes to everything. I'd schedule meetings whenever someone could do it. Like if someone was like, hey, look, we're doing it at 5:00 on Wednesday. I'm like, well, I don't want to do it at 5:00 on Wednesday, but I got to do it. And so anyways, that would be my advice is you're the boss, you own your own business. And the more in tune you are with you and your personal time, the better business owner, the better leader you'll be. So, and the better father you'll be, or mother you'll be. So own your calendar and be regimented about it. It's been a game changer for me.
And this is a process for that, at least that I've seen. So if this is what you also follow, is it's a simple. So in many respects, you have to follow your calendar. So we're not saying don't.
Sure.
The calendar tells me exactly where to go and when, but the issue is most people will schedule the business and then fill it in with the personal life and their family and their quote unquote priorities. What I'm hearing you really saying, Greg, is you'll schedule in the priorities, the personal priorities, and then fill it in with business.
My mornings are set. I know when I start, when I end. I know when I'm traveling. I know the kids' schedule, that's all number one. And then I fill in where I can have meetings and Zooms. Before it was the opposite. I still was a good dad, right? But it was like it was when it worked in between meetings, and so now it's totally different. I'm a way better person, especially the mornings are my sweet time. Like I've got to have my regimen in the morning and what I'm doing exactly how it works in the morning, because it just makes my day so much better. And I keep that. I don't do the social media thing in the morning. I'm not texting in the morning. I keep my mornings to myself.
Well, guys, if hopefully you've learned a lot, because first of all, that is just filled with nuggets. So thank you, Greg. And
Thanks.
If you want to connect with Horizon Trust, by the way, you can just take the simple step. We've set something up for you where you can go to mastersofbusinessira.com. Just go to mastersofbusinessira.com. They'll be able to walk through it with you. Does your IRA qualify? Not? How do you do it? How do you roll? It's all very, very simple. Was my experience. It was like, oh, that's it. Now I can buy houses with my IRA instead of only buying, the S&P 500. So You're welcome to go there and you'll have an easy connection. Greg, thank you for jumping on here, man. A lot of wisdom, and I love the conversation about identifying opportunity, looking at risk, assessing it. And I love the way you discern and you're clear. The thing I'll just compliment you with as we bow out here, but I'm complimenting you just for the record, not for the sake of the compliment, but because it's such an important quality that I want our listeners to just do a self-audit. Do you have this? You are discerning and you have boundaries. That's the key. You have decided on where your personal and business boundaries are. And as a result, it creates a lot of respect. A lot of people, look, entrepreneurship, it's very, very difficult. But one of the things that makes it more difficult than it ever had to be was you go into deer mode, you go into chase mode, you go into, and instead of just establishing right out of the gate, here are the terms of engagement, here's there's going to be chaos, but it's going to be within this container. And outside of there, I'm going to control my world. I think you do a masterful job of it. You have a really awesome company. I've had the opportunity to visit. So thank you for jumping on, man. And the podcast is better with you. So we'll see you soon.
Thank you. Thanks, Dan.